Yo, what's going on YouTube? It's O'Neil from Tap to O'Neil. Another week, another $1,000. And as you guys know, this was a very interesting week. Had a lot of market sell off and a lot of uncertainty going on in the markets, with everything going on as far as jobs, labor reports coming up next week, um, government shutdown. Everything is just like, it's just been a crazy week. I went down much as as like $16,000. It's crazy, crazy. But we stayed 10 toes down. We stuck it out. We held strong, and we just adjusted. You got to know how to adjust during these market conditions. Anything that's gonna happen in the market, you got to understand and know how to adjust, which ways to move, and that's exactly what I'm going to be showing you guys today. So I'm excited to bring this video to you guys because I feel like these are good teaching moments. Anytime like the market dips like this, I want to show you guys exactly how it affected my portfolio and exactly how what I did to remain strong and stay adjusted. I nearly got margin called, but I adjusted and we avoided the margin call, and yeah, we just kept it moving from there. So we're gonna do our weekly $1,000 deposit in the laptop, and then we're gonna switch to a mobile version of the app, do a deeper dive into the portfolios, and show you guys what's going on. So stay tapped in. So as you guys can see, the portfolio, individual investing account is sitting at $72,039.31. This is a crazy drop from where we was at last week. This usually happens, as I said. Every time we hit our new all-time high, you guys, last week our new all-time high was 91,000, if I'm not mistaken. Now every time we hit these new all-time high, we got some pullback, especially because my portfolio is extremely volatile. But we remain strong, and we did what we had to do. We're currently up $304.52 on the day. It's currently the weekend, so only thing that's trading is crypto right now. On the week, you can see, woo, I know, down $10,676.18 on the week. That's down 12.91%. It's crazy, man, crazy. Like, let's show you guys where we started out at the beginning of the week. We was okay. Why is this thing not okay? We was at 82,000, so literally like a 10K drop, and we went down as much as I said. Where is it going to show? Is it not showing it here? It's saying 15, but I'm pretty sure it was 16 on the Robinhood app. On the mobile version of the app, it definitely says 16. So I don't know why it's saying 15, but yeah, I'm down on the week, man. We had a little bit of slight recovery. As you guys can see, down to 15, and then we recovered in a little bit, gained some, got back to 10K, just a 10K loss. Let's see how we're doing on the month. Currently down $2,342.94 on the month. As I said, violent swings in my portfolio. I'm pretty sure you guys noticed the drop in you guys' portfolio. I've seen some crazy drops, but man, I think mine was the biggest. The thing I want you guys to understand is that this is not a realized loss. This is unrealized loss. This just means the value of my portfolio has dropped. This doesn't mean that I've took a loss or I completely lost. It's just like the value in my portfolio is still the same. The amount of money that I have invested is still the same. So when the market recovers, those gains are still going to go back up. So I want you guys to understand that. I want to preference that by saying that, so you guys get a little bit of an understanding. So on the month, our peak was 85. We had a peak of $85,000 on the month. That was a 15% gain, and we went all the way down, man. Crazy violent swing within the last couple of weeks, but hey, we're gonna remain resilient. I'll show you guys 3 months up 26%. It's a 14, nearly a $15,000 gain. Year to date down 2,100. uh, Year up 10%, which is pretty good, meaning that we are on pace to beat the S&P 500, which is probably about 11%. And then all time, we're up 10,000, which is not impressive at all. This is not impressive at all. So yeah, we're up about 16%. 17, nearly 17%. So this is show you guys some proof. This was back when I started investing. It was back in 2019. I don't know, this thing on the laptop is extremely annoying. I don't know why it's not showing, but yeah, it was back. Okay, so there it is, back December 30th, 2019. That's when I first started investing in this portfolio, and then you guys do know I have my Cash App portfolio. That's the portfolio I actually started out on. But let's not waste no time. Buying power is at $13,681.54. Zero cash. Margin total is $46,055.36. Margin used $30,366.85. We got an option collateral being used of $2,000. Pending order of nearly $7, $6.97 to be exact. Then we got futures buying power of $3,420.39, and then our margin buffer is at $3,395.63. So nice, decent buffer. We're gonna go ahead and do the deposit. Let's get this moving so we can actually deep dive. Okay, 1K, review transfer, continue with standard. We gotta play that Jeopardy music for this. It's gonna take a little bit. All right, deposit initiated. Let's see what the account is sitting at now. All right, we at $73,001.83. Margin buffer or our buying power went up to $17,681.54. You guys know every time I deposit $1,000, Robinhood allows me to borrow $2,000 of their money. And our margin total went up to $49,055.36. Margin used went down to $29,366.85. Option collateral is sitting at $2,000. Futures buying power is at $4,420.39, and our buffer went up $1,000, so it's sitting at $4,395.63. So that pretty much covers this. We're gonna go ahead and switch over to the mobile version of the app. So stay tapped in. All right, we're in the mobile version of the app now, and as I said, we had $72,985. Buying power $17,000. All right, so let's go ahead and dive into it, see what's going on. As I said, we almost got margin called, and you guys can see. I'll go ahead and look at this real quick. We almost got margin called. We have a buffer of $4,395, nearly about $5,000 buffer. This was close to going completely down. Like I said, a really large sell-off in the portfolio, and you guys know my portfolio is extremely volatile due to my crypto holdings, and then also the trades, option plays that I've been making on MSTU, which is tied into crypto, also specifically Bitcoin with MSTU. So let me show you guys exactly how I avoided getting margin called, just real quick. So I had options collateral. It expired. Oh, let's just show you the options real quick. So our options value is at negative $2,598. This is not a loss. This just means the value of my options went down $2,500. But we did have a nice recovery on Friday because the people that are candidates for the new Fed chair to replace Jerome Powell, they are pretty much saying that we should cut rates. So that gave the market a little bit of a hope. And I think the consumer price report came out as expected. So inflation is tamping up a little bit, but nothing crazy. So the Fed might be leaning more towards the job market. We're going to see this coming week, see what the job market is looking like. If the numbers, we're going to see if we get a soft landing on a jobs report. We're looking for a soft landing, because if it's not a soft landing and it's a hard landing, that means it's pretty much going to signal that we're in a recession. So that's not really a good sign for the market. But I'll take advantage regardless of, people going to take advantage of the buying opportunities and stuff like that. But that's pretty much what that is going to mean. So let's see what we got here. We took an assignment on MSTU. You guys remember I sold a $5.5 put on MSTU. Obviously, MSTU is trading at let's see what it's trading at. It's trading at it closed out at 431 right now. So we got about 1,600 more shares of MSTU, and I'm completely okay with taking this assignment because like I said, I'm hoarding my shares on MSTU. Because I'm expecting a nice, decent run up. You guys can see we're nearly down $5,000 on MSTU with an average cost of $5.12. 6,100 shares, market value is at $26,000. So a lot of my money, similar to how I was trading leverage position with TSLL, tracking Tesla, a lot of my money is just locked in, or my margin is just locked into this one trade. And then my options are not doing too hot. Total return is down negative $966. You guys seen last week it was up crazy, but this just speaks to the ebbs and flows of what can happen. But as I said, we still got some more time on these options expiring. Some of them are expiring this week. One, I think the credit spread is expiring this week, and we'll dive into that in a little bit. But as I said, I'll give you guys a little explanation. On the last day of the market, it was down. So forget all of that. Let's go ahead and show you guys exactly what I've been talking about and why I'm bullish on MSTU, right? As I said, and I called this out, MSTU, anytime it dips to these prices, you see, guys, it went as low as 385, well, $3.85, right? Back when Trump announced the tariffs and Liberation Day and all that stuff, it dipped to the same price, $3.75. And what happened immediately the next week? Green went up as high as $6.13. That means, and that signals that there's buyers waiting for this stock or this ETF to drop to these prices. And the same thing happened right here. When MST dropped to $4, what happened the next week? Green. And it went up as high as $5.80 in a week. So that shows the potential within the MSTU. You guys got to understand these support levels. Now, I'm not saying I know what's going to happen next week. I'm not saying next week is going to be green, but time and time again, history can repeat itself, and this is a value stock. I keep saying that, and I keep repeating it. We'll go ahead and look at the year. Not too hot on the year, but when it dips to these levels, buyers are waiting to push the ETF up. This just launched last year at September 18th. So let's go ahead and look at MSTR, and show you guys the chart on it. So the same thing is going to show a display. So anytime MSTR, for instance, drops to $231 in 1 week, the next week, green. Same thing right down here. Anytime it drops to the low 200s range, the next week is going to be green. I'm not saying that's what's going to happen next week because we still got job report. We still got to see what's going to happen with the job report. But I'm making these call outs. I've been telling you guys these things. I've been dropping, a little bit of plays in the Discord. If you guys didn't join up on the Discord, join up on the Discord. It's free to join. So yeah, these are the things. This is how I analyze the charts. I look at these things, and to show you guys that this is a value stock, this is the performance on the year. It's up 81% on the year for the past 5 years. Look at this. This is a crazy percentage. In the past 5 years, it's up $1,984 and 88.88%. Like, this is insane. This is insane. Like, this is an insane gain within the past 5 years. 1,984.88%. Crazy, insane gain. That's why I'm saying this is a value stock. This was just excluded from the S&P 500, which means it had the potential of being added to the S&P 500. That's why I'm bullish on it. Long term, even if these trades, these short-term option plays do not go in my favor, I'm banking on it long term. I'm going to, pivot and turn it into a long-term play. That's what I do when it comes to these option plays. If I take an assignment, I'm going to run the real strategy, except this time I'm not going to be doing the wheel strategy too aggressive because I learned from Tesla. If I sell my covered calls too close to the money, I can lose out on that upside, and then I might have to pay money to roll the options, and it just won't be worth it at that point. You just might as well cut your losses, even though it's not a loss. It's just money that you lost out on as a gain. You gotta understand the language that I'm giving you. So yeah, enough of that. Let's go into the other plays. PLTW still doing pretty well. Did dip a little bit down about $95 on this play because it went down about $3. But like I said, the whole market dipped. So as expected. But let's look into PLTW. They did pay us out this week. Currently up $24.40 overall. Average cost of $45.48. 52 shares. How much they paid us this week? They paid us $35. This was a nice dividend payout. I'll show you the breakdown on that. That's about 67 cents per share. We currently hold 52 shares, and that we do have drip on, which means dividend reinvestment plan. All those dividends are getting reinvested back into PLTW. That's specifically for this round hill ETF. I don't necessarily do that for the yield max ETFs, and the reason why is a little bit different. But we'll dive into that a little bit. Previous week was $25. I don't think I covered that on last week, so I'm just showing you guys real quick. 49, which was about 49 cents per share. So moving on from there, then so as you guys can see, I've been purchasing a lot more calls. Now, as I said, I'm experimenting with these things. I've been experimenting with these things and I've been learning on the fly. Nobody's teaching me these things, but if you putting money in the market, you best believe you're going to learn. You're going to take some losses, but you're definitely going to learn. And learning that you can gain, or the knowledge that you can gain from, making these plays with your actual money is, it's all going to be worth it. Because I understand the conditions of when to buy calls now. I'm going to specifically, and I'm telling you guys this too, I'm going to specifically be buying calls anytime the market dips. You can do leap calls, you can do, short-term long calls. I'm doing my calls are set to expire at the end of October, so we're going to see the ebbs and flows of what's going to happen with MSTU, but I think these will go in my favor. Currently not doing too hot right now, but that's obviously due to the dip. And yeah, I've been buying a lot of calls. And then here's another thing that I did. So with the debit credit spread, I'll show you guys real quick. We're down $440 on the debit spread, or the credit spread. Uh, so it's not doing too hot, but hopefully within this next week it goes up to at least over $5.5. The break even is at 564. So hopefully, MSTU can push up to that in the next week, but we got to see what job report is going to do. And we open up a debit spread. This is on BITX. This is a leverage ETF that tracks Bitcoin. You guys are getting the theme. I've been doing a lot of leverage plays. Reason why is because if you're like my account and you have a smaller account, these leverage plays is a low cost to get into these option plays with a lot of upside potential. Yes, there's downside risk, so you guys got to do your own due diligence, do your own research, and also gauge your own risk. My risk is a little bit higher because my portfolio is structured in a certain way that I can protect myself, but you guys can take a little bit of some of my plays. And if you guys are gonna run option plays, I would recommend you running your option plays a little further out of the money. I run my option plays closer to the money, sometimes in the money and sometimes deep in the money. You guys remember about 2 weeks ago, I made $5,000 off of MSTU by putting what's it called, a put, selling a put, a $6 put on MSTU, and I think it was for 2 weeks, 2 weeks out. And as you guys can see, ended up getting assigned those shares of MSTU. We're sitting at 6,100 shares, but my average cost is down. So we got the money and we got our average cost down to a decent price range. This is the price that I'm willing to have MSTU at. It's pretty close to that, $4 range. As I said, remember, anytime MST dips to these low $4 and even high $3 range, buyers are usually looking to push this ETF up. So that just gives you a little bit of insight on that. So the debit spread, it's something I'm experimenting with a little bit. So, and I kind of got this from Looney. Shout out to Looney again. He does open up debit spreads, but as I said, I'm understanding the conditions of when to open these plays up. So I got 20 contracts on a debit spread of 49 to $49.5. So I'll show you guys real quick. If BITX pushes up to, let's just say, $52, let's go $52, I can see a similar return of $47. But it can be a lot more aggressive than that. It's all depending on what's going to happen. You guys see it does have the potential to go to $51. And within the past week, let's see, it was currently sitting at $57. So this ETF definitely does have a lot of potential and a lot of upside. So we'll see. All right, moving on from there. Ethereum is back over that $4,000 mark. It dipped a little bit below $3,000. Bitcoin is recovering, so BITX is definitely going to be moving up. MSTU is definitely going to be moving up. Bitcoin has been sitting at that 108, 109 range, but as I said, everything's going to be relying on those job reports coming out. Went as low as 106. That's crazy. All right, so TSLL, Tesla's doing what it does. I got a little dividend coming from that. TSLY, oh my god, this is insane. This yield max fund is doing insane. Up $616. Average cost is $7.78. Yo, Tesla is a dark horse. It's been the only one that's like been standing strong, even though the dips, within and bad news that's been coming out. Like, yo, this thing has been staying strong. And you guys remember, I was purchasing puts on it or selling puts on it at the $15 range just a month ago. Crazy. At the $13 or $14 range. So crazy. But let's see. MSTY. This is a leverage, well, not a leverage. It's a yield max fund that tracks MSTR. And this is killing me. I ain't gonna lie. Misty is not doing too hot. I don't know what's going on with it. Currently got an average cost of $20.13, down $2,645.83. I don't know, man. What was our payout? I think we got this payout last week, $404. We're net negative right now on MSTU, even with our dividends that we got paid out. I don't know, man. I'm not gonna sell out of it. I'm gonna just let it do what it does, and I'll just collect the dividends. But I'm definitely not reinvesting back into these. Well, at least Misty for sure. I'm definitely not reinvesting back into it. I'm gonna just let it do what it does. Hopefully, it has some signs of recovery, and it does recover. Alti, it's been, let's see how I did on the week. Let's see how down 24 cents, but that's due to the market conditions and also the dividend payout. So it does dip a little bit after the dividend payout. Currently down $809. We're still up. We still at a net positive for Alti. Currently we're still holding 1,100 shares with an average cost of $6.17. $5,986 is our market value, and our payout this week was $101.36. That's a breakdown of 9 cents per share, as we usually get. YMAX, another weekly payer. I do not reinvest back into this. We're only down $26.30, and we are at a net positive with this. Currently holding about 101 shares with an average cost of $12.90. See how much they paid us out this week. That was trash. Wow. That was trash. That is trash. 8 cents per share with a dividend payout of $8.29. That is a trash dividend payout. I'm not gonna lie, y'all. You guys can see we've been at that $11 to $13 range. I haven't seen it dip below $10 in a minute. Let's just see what it's been like. Yeah, it hasn't dipped below $10 in a minute. That's actually this is the worst payout. But as I said, market conditions play a factor in that. Coney, do we get any payout? Not too bad, down $660. I'm pretty sure we're at a net positive for Coney. Our last payout was about 2 weeks ago, so we're going to be expecting one in about 2 weeks. Hui's doing what it does, still up on Hui. No dividend payout this week. I just covered PLTW a little bit earlier, and everything else is pretty much the same. So let's go to the traditional. Sorry about that. So the traditional IRA, I had a little interesting play with the traditional IRA. I wasn't sure where to put all the money that I got out of from TSLL. Currently holding a buying power of $111.18. So I went ahead and dumped all my money into Ulti. So I currently hold about 800 shares of Ulti now. So we are holding Ulti, Tech L, and TSLL. And the reason why I put it in Ulti is because I know Ulti is going to be paying me out on a weekly basis. And even though it dipped this week, we still got a nice dividend payout of $73.68. In about a week or two, if it still holds its NAV, net asset value, will be at a positive net return currently just down on the net return, but that's completely fine. Still, once we get positive again, I'll try to figure out what I'm gonna do with this portfolio. But as I said, this is a little bit risky of a portfolio. On the last day of the week, we were up $74. And let's see how we did on the week. We're only down on $102.64, which is a 1.94% decrease. And then our Roth IRA is currently sitting at $3,545.17. Let's see how we did on the week. Only down $7.44. So if you guys are looking for a way to safely invest, or if you're a beginner investor, I would recommend copying the ETFs that I have within my Roth IRA, and I would recommend just staying involved with just a Roth IRA, because this is tax-free money when you get to your retirement. So we currently hold 64 shares of SGHD, JEPQ is at 25.70 shares, and SCHG is at 10 shares and 10.37 shares. The breakdown on that is I do invest about $8.40 into JEPQ and SCHD on a daily basis, and on a weekly basis I put $6 in SCHD. This portfolio is specifically structured for my retirement, because of the fact that Social Security is most likely to run out. I want this to make sure like I'm good. Hopefully this grows to $1 million. That's the goal. That is the goal, to make sure this grows to $1 million. But that is gonna be heavily reliant on if I max out my contributions on a year-to-year basis. So I'm gonna try to hold true to that. But this is a pretty much a safe portfolio to copy and just do things with. SCHD and JEPQ are really nice dividend payers, and SCHD is geared towards growth to just help the overall portfolio grow a little bit, so we capture a little bit of the upside when we do have some aggressive swings in the positive direction. So let's go ahead and dive into the overall account, see what that's sitting at. All right, 80,000. Okay, now we're at $81,736.10. So we're currently down, like I said, $10,000 from where our all-time high it was. This usually happens. You guys gotta, if you want to become an investor, you guys gotta understand the ebbs and flows of the market. You gotta understand these things are gonna happen. Remain resilient. That's the word of the day. Resilience. When we have these dips in the portfolios, it just means that we're gonna be due for a nice pump in the market. And I don't know, the next pump or the next all-time high, it might be 96,000. Like I said, everybody had a dip. You want to remain resilient during these times and stick to your strategy. Adjust your strategy on the fly. Learn how to adjust, your positions and protect yourself. So yeah, make sure you guys hit the like button, subscribe, turn on post bell notifications, join up on the Discord if you want to talk to like-minded individuals like myself and others. And yeah, without further ado, it's Tattoo on now. I'm signing out.